And you're looking there at some images from Spain today. Riots, protests in Spain. The situation is getting a bit ugly, a bit out of hand. Also riots and protests in Greece as well. The Greeks are, the entire country apparently is on strike today. Morning, everyone. This is the Markets Hub. Europe heating up again. They had a couple of calm months there, but now Europe is coming back to the fore. More austerity cuts, more economic weakness, more questions about the ultimate salvation of the euro. Katie Martin joins us from London this morning. For us. Katie, how are you? Give us the latest. Let's talk about Spain first, because it seems like there is a lot going on in Spain right now.
Yeah, there's an awful lot going on in Spain, and anyone out there who's a bit of a Euro crisis junkie has certainly got their fix again today. It's definitely back on the agenda. It's definitely back in the headlines. As you say, Spain is the focus. There was a large protest yesterday against the austerity measures that the country is already putting through, and this is going to make it difficult for the authorities there to push through anything further. We've got the riots, we've got all this kind of political situation, we've got stresses internally within Spain over regional politics. The one thing we don't have from Spain yet is a formal request for aid, and this is what the market's really hanging its hopes on. We don't have that yet, and that's a big problem, because without it, the Spanish authorities can't apply to the sort of help that the European Central Bank can start to kick into the bond markets, and so it all becomes a little bit cyclical. So today in the markets, with eyes focused on, exactly as you say, what's been going on in Madrid and also protests in Athens and whatnot, there has been a bit of a sell-off. Now, I wouldn't get carried away. We've had a little bit of weakness in the euro, which has taken us back to levels that we haven't seen since the German Constitutional Court said okay to the European Stability Mechanism, which is the Permanent Rescue Fund. We've had Spanish 10-year bond yields go back over 6% briefly. Now, you can argue all day about whether the 6% level really matters. It kind of doesn't. But the point is, it's a kind of high watermark that gets people's attention. There has been a bit of a sell-off there. European high-yield bonds have been sold off. Some of the key stock markets in Italy and Spain have also been sold off. So there's plenty for people to worry about, but what we won't know until we've had the Spanish bank stress tests and also an assessment of the Spanish budget towards the end of this week is a really clear sense of whether they are genuinely going to ask for the help that the European Central Bank can give them with all of the austerity and conditionality that will involve.
Right. You know, Katie, it's interesting. We've had a few calm months in Europe since, basically since Draghi gave his whatever it takes speech. Now it's heating up again, but this stuff this seems to be a pattern, that the Eurocrats come out with a plan, everybody calms down for a few months, and then the details start to get worked out and the plan seems less solid and you start to see this again. I want to ask you about the story the other day out of Germany. Germany, Finland, and the Netherlands kind of put a little bit of a kibosh on using the bailout funds for the banks, right?
Yeah, they did put a little bit of a kibosh on it, but I would describe it pretty much just as that. It's a little bit. Of course, this is Europe. There are lots of different authorities all over the place that have got to agree pretty much unanimously to everything, and so it makes the decision-making process absolutely torturous. This is why we're still in this situation years into the crisis. But I mean, we had a story in the Wall Street Journal today talking about the situation in the markets, and as one fixed income strategist was saying to us, the plan that the European Central Bank has laid out is not a dead duck. We are nowhere near the point where the markets are saying, right, this ECB plan is out of the water. Absolutely not. The yields are nowhere near where they were. The euro is not in anywhere near so much trouble. The markets are nowhere near so volatile. What we've had is a bit of a pullback today, largely reflecting the fact that there's been a big rush into Spanish and Italian bonds, for example, since Draghi did his whatever it takes speech. So this has been all the fuel that the kind of euro haters need to kind of really get excited again in what we've seen in markets today. But I think some of them are getting a little ahead of themselves, because realistically, Spain does look extremely likely to request the sort of help that will help out its bond markets. And so that could come any day now. It could come by the end of this week. Maybe it won't, but it will happen. And so that kind of supporting mattress, if you like, that the ECB has put under the markets is still there.
Right, and that's the big thing next to look out for, right, is that Spanish bailout, if it should happen to come?
Yeah, because at the moment the markets are caught in this very strange situation where, for example, Spanish bond sales go pretty well, but that's because people think that Spain's going to apply for help, but Spain's not going to apply for help if its bond sales go well. And so there's a million kind of silly catch-22 situations running through the markets, and we just need that request from Spain so that we can draw a line under it and move on.
Right, it is modern day Byzantium in Europe. Katie Martin, thank you very much. Appreciate the time.